Hi, welcome to Family Wealth Planning Partners. I'm Brian Ramsey, and we're kicking off a 3-week series around life insurance. Week 1, we're going to be talking term insurance, or the principles behind term insurance. We're going to look at a case scenario, why someone would use term insurance. Week 2, we're going to look at permanent insurance, kind of the same scenario. We're going to look at a case study on why someone would use permanent insurance. And in week 3, we're going to talk about a hybrid product. So be sure you turn into week 3. It's a pretty cool product we've been using quite a bit here lately. So first of all, we're talking term insurance. What we want to do first, and we always do this with a client, is sort of walk through our 3-step process around determining the answer to this question, which is, do you even need life insurance? Oftentimes we find clients have bought insurance years and years ago, and that need that they were trying to fill is no longer there, or life happens and circumstances change and there's just not a need for the life insurance, but they're still carrying it, or they're either overinsured or underinsured, and that's really more the case we run into. But what we do is we walk clients through our 3-step process. The first step is determine what need you're trying to accomplish. Typically that's one of 3 needs. We find that there's a need for replacement income, so both spouses work, and there's a need to replace some percentage of that income. Number 2 would be a reduction of debt, and then 3rd would be legacy planning. So let's look at a average case scenario that we see walk in the door all the time, which is you got a married couple, a couple of kids, and let's just, for this sake, say they're 50 years old, and they both plan on retiring at 65. So when we walk clients through that process, we determine that in this case scenario, let's say that there's a need for replacement of income to some degree, and then there's a need for, or a desire to want to reduce the debt. Now, when we ask those questions, we have determined that both clients are going to work to the age 65, so that's a limited time period, and they have plans to have their debt paid off by the time they retire at 65. Again, another short-term or a limited term time horizon on both of those goals. So once we determine that, as opposed to guessing how much coverage they actually need, we have programs and formulas that we plug this information into that gives us how much coverage we actually need, which is our step 2, determine the amount of coverage needed. And then 3rd, we determine the time period that needs to be covered. In this case, we know it's from age 50 to age 65. So it's a limited time horizon that needs to be paid. Now, you might be asking, well, what do you mean? I don't necessarily understand why a limited time period for these particular goals. Well, if you're only going to work to age 65, the replacement of income would only need to cover you to age 65. So beyond that, you wouldn't replace any income because you're retired and not earning that income anymore. Kind of the same scenario with debt. If you plan on having your debt paid off by the time you're 65, you wouldn't need life insurance coverage to extend beyond age 65 because you've had your debt paid off. And so if you want to continue that life insurance, that's more legacy planning, which we're not going to necessarily talk about today. But so in this scenario, we've determined that we have a need for replacement of income for about 15 years and the reduction of debt. Now, keep in mind that debt is reducing over time because you're paying it down. But still, we want to know what that coverage is based on worst case scenario. You have a spouse that passes away, within a month or so. So we want to make sure we cover all those goals. Now, that's term insurance, is the type of coverage you need. You do not need whole life insurance for a temporary fix. I see so many clients walk in this door that they've told us what their needs were years and years ago, and just very inexpensive term insurance would have solved their need, and yet they met with an insurance salesperson, and what did the insurance salesperson sell them? They sell them whole life insurance because one, the person made a lot more money on selling whole life insurance, but it just doesn't make sense when you have somebody that owns a whole life or a permanent life insurance coverage on a temporary need. It just makes no sense to me, but we see it all the time. So let's talk basics of term insurance. There's a little bit difference between term insurance and permanent insurance. Now, the one misconception we often find is that term insurance it never really lapses, just so you know. So if we have, in the scenario I just gave you, let's say we had a 15-year term policy on both the spouses. At the end of 15 years, it doesn't just expire. It actually continues. The issue with term insurance is it's just so expensive that it just doesn't make sense to continue the coverage. But the premium payments, typically during a term policy, the premiums are level premium, meaning that whatever premium you pay from day one, you're going to pay all the way through the term of the policy, which in this case would be 15 years. The other difference between temporary coverage and permanent coverage is there's no cash value. So when you make your premium payment, you're essentially paying into insurance coverage for your life that would fit a specific need for a specific time period. At the end of that time period, if you never used it, we hope you don't, but if you never used it, then you just let the thing lapse and it goes away, no problem. That's kind of what happens in almost all cases of term insurance. So those are the kind of basics behind what we call temporary coverage or term insurance. I will tell you that term insurance fits the bill for 95% of the cases I've ever worked on when we're doing life insurance needs. Term insurance, it fits the bill. It's super inexpensive. It satisfies a need really of the first two scenarios that we talked about, which is a reduction of debt and a replacement of income. It's great for that. The one component that's a little bit different is if you're doing legacy planning, and we're going to talk about that in week 2 when we talk permanent life insurance coverage. So that's it for this week. Hope you enjoyed it. Make sure you turn in next week. We're talking more permanent insurance, and then make sure you turn in for sure on week 3 when we're talking hybrid products. But if you have any questions or if you want us to run some insurance quotes for you, make sure you give us a call. There's a phone number that's going to pop up here on the screen. You can visit us at FamilyWealthPlanningPartners.com or peaceofmindradio.com. You can apply for or schedule for a 1-hour complimentary meeting, and that's with any member of our staff. You can do that with. So if you've got any questions, make sure you give us a call. If not, I'll see you next week. We're talking permanent insurance.